A few hours before those Yahoo earnings came out, my next guest was recommending the shares to investors. Colin Gillis of BGC Partners initiating coverage with a buy rating on the stock of Yahoo. Let's find out what he sees in the results. Good to have you with us, Colin. Thanks for coming in.
Always a pleasure to be here.
So tell me what happened, because we were doing the report, the quarterly report. It looked at first as though the Yahoo numbers, that they missed estimates, and you're saying no, you got to X out the results related to the Microsoft search business, right? So then they were doing what, EPS of 15 cents?
So the key thing that we want to look at Yahoo is, let's start with the top line, right?
All right,
so start with the top line. Is the company growing again? And what we saw is sequential growth that was very healthy, and equally importantly, we saw sequential growth in its very important display advertising business was 26%, and its search business that it's giving over to Microsoft also grew. So both of those metrics were important. The revenue was above the top end of their guidance. It was smack on. My number was a little north of 1.7 billion in revenue. So that's good, right?
All right. So revenue, good on the top line.
Good on the top line. Also, we see that it's we're getting a rebound in display advertising, right? So customers are coming back, and what happens is as they sell out of inventory, they're able to get better pricing for it, right? So they're not cutting prices anymore and saying, we have so much that we need to get rid of. You can have it at a wholesale price.
We'll sell it to you at a discount. All right, none of that.
Right. So now we come down to on the expenses side, and this is where the CFO comes in, and Tim Morrison. He's a solid GE guy, and he knows how to control expenses. There's still plenty of work to be done here. He's out there saying he wants to get margins to the 10 to 15% range by 2012, from the 6% range that they are currently. So ample room to control. But he had certain charges, restructuring charges, as well as costs tied to the Microsoft deal. And this is what was confusing is, do we want to exclude these numbers, in which case you have a beat, or do you want to include them, in which case you have a mild miss? But when the initial after-hours reaction, when the number just hit the tape, the stock traded down. But when people started realizing what was included in the number, the stock is now traded up somewhat nicely.
See, I thought it was really just because they were reading your report. After the numbers came out, they looked at your report and they said, oh, he says buy the stock, so that must be what we got to do.
Of course. Well, there's always that factor, too. But the reality is that this is a company that's hit an inflection point, right? They're actually seeing good demand coming back, and the new management team is just got off the conference call. They're saying all the right things. They're turning this company around. They're going to control costs. They're seeing revenue growth, and as their premium display inventory gets bid up and gets sold out, this is also helping their non-premium inventory, because those buyers who couldn't get the first move on to the second, and they're paying more for the remnant. So all in all, everything that Yahoo said was positive.
All right, and so I'm assuming that you still got a buy recommendation on the shares.
Yeah, absolutely. That's right. The thing we got to worry about is, this EU approval for the Microsoft search deal is coming up in February. So just, it's very important to mention to everyone that could be a major hiccup if the EU comes in and wants to block this deal or get more information or drag it out. That's a negative.
All right. Now, what about when you talk about margins? How are they going to get those margins from 6 up to 10, 12?
Sure. Well, the first thing you do is you got to have revenue growth again, and the company has to actually grow. And again,
and is that the economy? I mean, the economy grows, revenue grows.
Yeah, economy grows, revenue grows, but it's also the value proposition, right? So I mean, Yahoo does have the benefit that as advertising rebounds, right? Internet advertising has always been doing better than traditional media.
It's up like 7%. You had that number in one of your charts, and it's up 7%.
And and that compares to they're only down 10% in 2009, which was a very difficult year for a lot of other companies. So Carol was actually relatively pleased with the
Carol Bartz, right, CEO.
Right. So, but the key thing here is that the guidance for the March quarter showed the first year-over-year growth in many quarters.